Matterport just released their earnings after the market closed today, and the stock is definitely not happy, tanking right after that report. In today's video, though, we're going to hop into the details of that report, along with some of the key takeaways from it, and what we can expect going forward into 2022 as far as that guidance goes. So let's hop right into it. First of all, with Matterport's numbers, they came in with a loss of 10 cents. Expected, according to Yahoo Finance, that is, at least it was expected a loss of 9 cents. So a slight miss there, being a cent more of a loss. Very marginal there, obviously not much. Revenue, though, actually comes in at a beat at 27 million versus the expected 25 million. Some of the key takeaways for you guys from the report. First of all, total revenue was 27.1 million, like we mentioned, up 15% compared to the fourth quarter of 2020, but still down from that 27.66 million in that previous quarter. Subscription revenue was 16.5 million, up 32% compared to the fourth quarter of 2020, which is good because we know they're trying to transition over to that subscription revenue. Annualized recurring revenue, ARR, of 66.1 million. Total subscribers increased to 503,000, which is up 98% compared to the fourth quarter of 2020. So really nice subscriber growth there. So spaces under management, or SUM, grew to 6.7 million, up 54% compared to the fourth quarter of 2020. Also substantial growth there. Subscription revenue represented 61% of that total revenue in Q4. So it keeps growing as we expect, as they stated themselves. They want that to continue to grow to a larger and larger position of their overall revenue, resulting in more consistent growth and not lumpy revenue numbers. Services and revenue increased, driven by growth in capture services and in-app purchases. Significant investments in R&D and SG&A as they continue to scale the business as well. Now, as far as guidance, and this is where they missed, and this is where we're seeing the substantial amount of pain. Obviously not a big miss on EPS there, and also a beat on revenue. But of course, again, what we're looking for, guidance, I emphasized that a lot in my previous videos. Guidance is what we're going to watch for, and sadly, they did not deliver the best guidance. Of course, they're still growing, but they just didn't meet the expectations that were already out as far as estimates go for going into 2022. The main ones we're going to focus on right now is the revenue guidance for next quarter is a miss on estimates, along with the 2020 revenue guidance as a whole. They were guiding for 125 to 135 million versus the expected 160 million. So a pretty big miss there on the overall year of 2022 revenue. And then we also have a really big miss, and I'm sure there's an actual reason for this, and I'll look for this reason going forward in the earnings call and also when I get to read through more of the report. But a big miss in EPS guidance for next year. They're guiding for a loss of 47 cents to 52 cents a share versus the expected average of 25 cents. So that's about double of what they were initially expecting, which is kind of crazy. That's a lot more loss than we were initially expecting, and also analyst estimates showed. So I'll definitely be looking. I'm sure there's some kind of reason why they're taking this loss. Maybe they're investing more into their growth, or it was for the acquisition possibly of Enview. I'm not exactly sure where they're taking this loss, but I'll look for the reason in their report, and hopefully I can give you guys a little bit clearer idea of why this is in my next video as well. So basically what this shows as far as guidance and people are what they're looking for, they want to see, can they keep up with some exponential growth, crazy growth? And this report honestly is just showing, no, they're not able to do this going into 2022. They're showing signs that they're slowing down a little bit on the growth, but of course they are still growing. Recurring subscription revenue is expected to be between 80 million to 82 million, translating to a 31% to 34% year-over-year growth. Still fantastic growth in my eyes. And then reoccurring subscription revenue is expected to be between 17.1 and 17.4 million, translating to 24% to 26% year-over-year growth. Also really good. Also just pasted this headline right here because it's funny to me. On Seeking Alpha, they had this headline that the revenue came in at 16.52 million, misses by 8.62 million. That headline's completely bogus. Don't listen to that. That's why you can't trust these headlines. Hop into the report for yourself and see the actual numbers. They just saw the first number they saw in there was the subscription revenue, and they posted that. So be careful about those headlines. That's a very misleading headline, missing by 8.62 when they actually beat on the revenue. So be careful of those misleading headlines out there. As far as my report's price action, as you'd expect with bad guidance, we got a hard drop on the earnings release. And of course, primarily due to that guidance. Again, the revenue and EPS for Q4 of 2021 was not that far off the estimates. So hitting a new all-time low now in the after hours of $6.49, down around 13%, and we'll see how that continues throughout the post-market. or after hours trading. And then of course on market open tomorrow, we might have more retailer investors trying to settle the positions. We'll see what happens. Although I feel like so much fear has already been priced into this, we might not see a super drastic reaction. Obviously 12% down does suck for us long-term holders, but it's just a speed bump in the road, as I do view this going forward long-term. Again, right now, I'm not too worried about the price fluctuations. These can be viewed as buying opportunities. I'll definitely be listening into the earnings call though and reading through more of the report, looking for more of the specifics, and I'll give you guys even more information when I have it for myself, and I'll be definitely releasing that in my next video when I become aware of it. So for me, more buying opportunities. Again, I feel Matterport's very early in the stages of digital twins. They have a very large addressable market that they're just starting to tap into, and we'll definitely see this company only continue to grow over the next 3 to 5 years. These kind of price fluctuations for me are still buying opportunities. So again, reassess. Are you investing in the short term? Because if you are, there's probably going to be more pain ahead, especially going through 2022, if they're going to be missing on any of these numbers coming forward. But again, if you're a long-term investor and you're like me, I still view that there's a lot of growth ahead of Matterport, and they have a large addressable market to still get access and tap into. And I feel they are still executing on a fundamental level the best they can. So as long as nothing has fundamentally changed in the business, I'm still an investor, and not until I see something fundamentally change where I feel like this is no longer going to work will I actually pull my money out of the stock. So thank you guys for watching the video. Hope you did enjoy it. Hit the like button if you did, and do consider subscribing. I'll see you guys in the next one.